The aim of this video is to clarify and expand on a few of the aspects of the new cryptocurrency tax regulations in the UK, following my last few videos on these, which I'll include links to here and in the description if you haven't watched them yet. And we'll be looking at several things in this video, such as going through an example of having to pay capital gains tax on your crypto gains, when you might have to pay income tax on your crypto, looking at whether you can gift crypto tax-free to a wife or husband, for example, whether you can offset losses against your gains or profits, whether you'd have to pay inheritance tax on crypto, what records you need to keep as a crypto investor, etc. As always, none of what I cover is financial or tax advice, but is simply education. And I'd just like to take this opportunity to just thank so many of you who've liked the videos, subscribed to the channel, and added some really kind and useful comments for everyone to see. So please do like this video and subscribe to the channel so I can continue to offer more content for you in future. And let's jump straight in and take a look at these rules on crypto tax, what we need to report as individuals operating in the UK. Firstly, when do you have to pay crypto tax? Well, you only have to pay tax on your crypto when you dispose of or sell your crypto. And that isn't only if you sell your crypto back into fiat currency, like pounds for example. The government's definition of a disposal includes if you sell, swap, or exchange one cryptocurrency for another, if you use crypto to pay for goods or services, and if you give away tokens or coins to another person, unless if it's a gift to your spouse or civil partner, which I will mention again in a bit. And you'll only need to report it and pay tax on your gains or profit, with the tax that you'd need to pay being called capital gains tax. Everything is obviously subject to change with the government, and everything covered in this video isn't financial advice, but simply education, as I mentioned previously. But capital gains tax is currently 20% if you're a higher or additional rate income tax payer, and normally, but not always, 10% if you're a basic rate taxpayer, depending on how large your gains are. And we'll look at these figures again a bit later in the video when we go through an example. You can offset a few costs against the gains you make to reduce your capital gains tax bill, and these include, firstly, the transaction fees you paid, also the AEA or annual exempt amount, which is your tax-free allowance, which will only be £3,000 from April 2024. And by the way, this was £12,300 in 2022 to 23. So you're essentially paying capital gains tax now on £9,300 more than you would have been 2 years earlier. And you can see here the increase in tax that the government is estimating it's going to bring in based on this in millions of pounds. So 425 million more pounds in 2025 to 2026 due to the reduction in capital gains tax allowances. You can also gift your crypto to a spouse or civil partner and use their AEA of £3,000 to reduce your capital gains tax slightly. And finally, you can offset losses against capital gains tax currently for up to 4 years in the future with HMRC. So let's look at a basic example of this to hopefully make it clear. So let's say you have one BTC held in cold storage, hopefully, and you bought it at £20,000, just as an example to make the numbers easy for the purpose of this video. Then let's say the price of BTC reaches £100,000 in early 2025, and you decide you want to sell it. And I'm not going to be looking into investment strategies here, for example, whether you should actually be selling that BTC or not. I'm simply looking at the rules the government's imposing on us here and going through an example. But you'd obviously have made a £80,000 profit. So let's now look at taking the deductions off that gain that you don't have to pay tax on. So firstly, transaction fees, let's just say £20, the AEA of only £3,000 if we're selling after April 2024. In this example, I'm going to gift £3,000 of my crypto to my wife to sell and use her AEA of £3,000. And that, as you can see here, leaves a gain of £73,980. If you're a higher rate taxpayer, so you earn more than £50,270 currently, or you're an additional rate taxpayer, so you earn over £125,140 currently, then you'll need to pay 20% capital gains tax on your gains. But if you're a basic rate taxpayer though, so you earn less than £50,270, and you had the gain we saw above of £73,980, then you'd pay 10% capital gains tax on your gains up to the higher rate tax rate, and then 20% on anything above this. So hopefully this basic example helps, but I would always advise contacting an accountant who specializes in crypto, or who at least has a good understanding of the crypto tax rules, as it can get quite complex. And let's now move on to when you might have to pay income tax on your crypto according to the UK government, rather than capital gains tax. Well, firstly, if you receive crypto as income, then that would be subject to income tax and national insurance contributions on the value of the asset. For example, if you're a regular trader and are seen as making an income from your crypto business, then income tax could apply. Some staking also, if it's seen as income rather than a trade, then that would fall under miscellaneous income tax also. And if you gained new cryptocurrencies through staking, then you might have to pay capital gains tax on them if you sold them later at a gain. And as with all things tax and crypto, I suppose, it's a bit of a rabbit hole which can get quite complex. For example, if you're into crypto mining or airdrops, what tax would be due? And I won't be going into those for that very reason in this video. And I think it's worth mentioning though that inheritance tax on crypto is treated the same as it is with property, so that would apply, although you obviously have the complexity of private keys and how to pass them on. But if the private keys are lost and the crypto isn't accessible, then you wouldn't be liable for capital gains tax. And how will the authorities, government or HMRC in this case, know which tax is due? And even if it is? Well, firstly, you'll need to work out what tax is due yourself and report this yourself to HMRC. And if you've used centralised exchanges that are approved by the FCA to operate in the UK, even historically, they will be reporting customer data to them, so they can track this and chase up those who don't pay tax on their gains or on their earnings. So for example, if they saw you added £10,000 onto an exchange and then £100,000 went back into your bank, then you might be asked some questions if you didn't declare it. And also, let's look at the crypto records that you're required to keep and to report on according to HMRC and the government. So if you've made a gain, for example, after selling a cryptocurrency, as we saw earlier in the video, the following are the records you'll need to keep according to the government: the type of crypto asset or cryptocurrency, the date of the transaction, if they were bought or if they were sold, the number of units involved, the value of the transactions in pounds sterling as at the date of the transaction, the cumulative total of the investment units held, and finally, bank statements and wallet addresses. So that ends this video, providing an update on crypto tax in the UK. But as always, I'd love to know what you think in the comments below. And if you are interested in more of a tailored approach to your general crypto education, and you think you'd benefit from having someone look over your shoulder and guide you on your journey, I do offer one-to-one coaching to those who have the desire and the means to educate themselves further. And there are links in the description where you can message me and book in a free video call to see if we'd be a good fit. And if you found this content interesting, please do like the video and subscribe to the channel, as it really does help. And have a great day.